morning, everybody. Thank you for joining us for the first day of our Virtual Wealth and Advisory Forum. We have a number of presenters already in our panelist waiting room, and I thank you all for joining us today. I suspect a lot of folks will be joining us as we get started here, which is perfectly fine. So what I wanted to do to get started, my name is Michael Van Laerop. I'm the president and founder of New Outlook Wealth Incorporated. We're a Winnipeg-based financial planning firm. What I wanted to do is give you guys, you folks over the next 5-10 minutes, a bit of an overview of what inspired me to do two things. One was to launch the company New Outlook Wealth, which is something we did in 2020 of all years. And the second part is to help you have a bit of an idea of what inspired me and inspired us to create the firm. What this forum will do, I think, over the next 3 days, 3 mornings, will be to showcase in a very real way the ecosystem or the environment that we've created with a variety of relationships and key partnerships with vendors, suppliers, asset managers, insurance MGAs, the whole works, and especially on the technology side as well, what we've done to create a very independent but very supportive environment for our advisors to succeed. So I'm just going to get going here right off the bat. And as you can see, the name New Outlook Wealth obviously is not by accident. It turns into a lovely acronym, NOW, and the NOW acronym is a very powerful thing in terms of sharing the idea of urgency, the power of action, of doing stuff. And that's something that we see as a struggle in the industry sometimes. So hopefully everybody can see this fine. So the origins of NOW. Really one of the core ideas I want to get across to you today, and I think you'll see this come through in all of the presentations, is this idea of fairness. And it's a very simple yet not straightforward concept. And what does fairness mean today in the industry for both advisors and for clients? And helping folks understand that is hopefully what we're going to achieve in the next couple of days. So for advisors, one of the frustrations that we've seen, or several of the frustrations that I've seen over the years and wanted to try to address and solve are the following. So payout ratios, you know, at the end of the day, it's all about a compensation issue when we talk about payout ratios and we talk about the grid and all these other things. But I deliberately use the term payout ratio because it's something that a lot of advisors don't spend a lot of time thinking about or a lot of time focusing on, but they should. So the payout ratio really is, what are you getting paid in relation to what the client is paying in management fees? So it's not the same as saying, well, I'm getting 40 or 50 or 60 basis points or 70 or whatever it happens to be. The basis points are really just a reflection of how much is your comp in relation to the total client account and the amount of money that they have invested. So that's the basis points. And that's an interesting metric, and it does matter, but what it doesn't necessarily reflect on fairness and what is fair to the advisor. And that really speaks to the payout ratios. What are you actually earning in relation to what the client is paying? And in many distribution channels out there, we can see that payout ratio is extremely low. Which not only means that the house is keeping a large portion of it and MERs and so forth, but it also means that the advisors, and this is the biggest issue really, is that they're not being paid sufficiently to service the clients that they have. So payout ratios matter. Sales grids also matter. Something that I wanted to do very early on was come up with a platform where we didn't have a grid at all. So the traditional notion of a grid is, of course, how much do advisors get paid in relation to what the company or the dealer is getting paid? And that's a grid, I get it. But the sales grid is something that most advisors that are familiar with certainly captive sales networks will have experienced that much of their career. Even in the insurance industry, I shouldn't say even, it's probably even more prevalent there. But it's a notion that, of course, performance makes you go up this scale, these levels and hierarchies, which you have to based on productivity, which in and of itself doesn't seem like a bad thing. But what it does, of course, is over time creates inequities and creates potential conflicts of interest, and overall creates enormous frustrations for advisors, even those at the top of those grids, because there's always the risk of falling down them or that the game changes. At the end of the day, most sales grids are a little more than a game to economically motivate people to do what the company or the dealer wants them to do. So by not having a grid and having a very simple leveled playing field for all advisors, I think is something that's very, very important. And I suspect strongly that it's a decision we made early on, and others will follow suit in the industry. I think the days of the sales grid are numbered. The compliance burden, especially for MFDA and IIROC advisors, has become very significant. Depending on the company you work with or the dealer you work with, that compliance burden has become more than simply an administrative headache. What it often ends up meaning is the necessity to have additional staff, to pay for the overhead of that staff in order to satisfy the compliance departments of the dealer. So a lot of that burden is is not being handled by the corporate side of things or head office side of things. It's being handled at the grassroots level, which arguably that's fine from a regulatory perspective. But what's not fine is that it makes things very unproductive. And in some environments, that also creates what I would call an anti-sales culture, whereby it's easier to be compliant by not doing anything. So I'd rather sit on my book and service it rather than grow it or bring on new clients, because the moment I bring on a new client, I'm filling out paperwork and spending my days trying to keep the compliance department satisfied. It's not to say that compliance isn't important, it absolutely is, but it's in how it's developed. So we wanted to find a model where we could allow our advisors to be financial planners, to be relationship managers, and not have to be burdened by compliance, and we've done that. Another big frustration, and the last 2 points really are related to each other, is of course the access to a broad product shelf, both from a wealth management and an insurance and lending perspective, is something that a lot of advisors are frustrated with, especially if they're in a captive sales network. But even some independents as well have expressed some frustration around this, even from one platform to another. But generally speaking, what we believe in profoundly is having a very open product shelf, and quite frankly, the antithesis of proprietary products is essentially we don't want to have anything that we favor from a compensation perspective, from a compliance perspective, from any perspective. It's basically here are our asset management options for our advisors and our clients. Use what's best for you, use what's best for your clients, and be happy and confident in those decisions. Now, for clients, fairness is equally important. And what are the biggest obstacles there? Well, essentially, there are many obstacles today for mainstream clients in particular. And I'm not speaking about high net worth clients, or it really is about the mid-market and below. And that does represent the vast majority of Canadians. So what's happening now is the wealth management space in Canada has become far less fair or equitable, in large part because of fees and about asset thresholds. In other words, if a client actually does want to get reasonably good financial planning advice, where do they go today? There are lots of firms that say that they do it, but the reality is it's quite different. It's not to say that they can't offer it, but they won't. There isn't enough of a business case to service those clients, and it's highly problematic. So generally speaking, the mainstream Canadian investor or advice-seeking client is going to be confronted with various barriers depending on which wealth manager they go to, including high asset thresholds to actually get access to top quality advice, high fees for active asset management. This continues to be a problem in the mutual fund industry, although fees have come down. The fact is that there's lots going on that's still very uncompetitive from a price point of view, which really begs the question whether there's fee fairness there. Poor service levels as well. It's nothing new, but that's definitely a continuing problem. And of course, it's very difficult if the advisor is not getting compensated properly to provide proper service levels. So it's a vicious circle. And of course, unfair fees for smaller accounts is a huge issue. The more money you have, the less you're charged for investing. This is a common reality in our industry. However, what that does mean is that for smaller clients, and there's an unfair penalty for being small, essentially, and that's something that's ubiquitous in the industry, and we've tried to greatly reduce that. And of course, at the end of the day, the nature of proprietary products and whether clients even understand what those are means that there's an impediment to mobility. So our asset management ecosystem is about freedom, it's about the client experience, and it's about the advisor experience. So we believe in the idea of freedom for our advisors and for our clients. We can move clients' money around without losing the clients because we have different asset management options. The client experience is above all about service. It's about performance, about low fees, and about getting the highest level of fiduciary duty, which can be achieved only through portfolio managers in Canada. So it's an extremely high level of service and expertise that's being given to mainstream investors through our firm, which is exciting. Same thing in terms of performance of portfolios, lower fees again, transparency of accounts, transparency of fees, disclosures, very important. And of course, security for our clients' money using custodians that you're probably all familiar with. And one of the last things I want to bring across is, of course, what this all really means is this outsourcing of wealth management is a really huge piece of our business model. Not only does it reduce or greatly reduce the compliance burden for our advisors, because our advisors are no longer in the money pie, as it were. Their fingers are no longer in the pie. It means that the client is getting a superior experience from an advice perspective. The rate of return debate is no longer a debate that the advisor has to have with the client. It's a discussion the client has with the portfolio manager. Fiduciary duties is the highest it can be. And of course, conflicts of interest have been greatly reduced as a consequence of this arrangement. So we're very big advocates of this model for a whole whack of reasons. And we do believe profoundly that this is the future of the industry in Canada. You can see very quickly sort of an account allocation set up for accounts as they come into our firm, how we differentiate between different platforms, different product options, and different fee ranges. So you can see very quickly that, generally speaking, anything under $250,000 of account size goes onto one of our digital wealth platforms, and then anything above 250 typically goes white glove portfolio management model. And fees, generally speaking, are well below 2%. You can see some of our asset managers, or all of them, I should say, not some of them. They're all here, and most of them are presenting over the course of the next 3 days, sorry. So that's very exciting, including one of our first presenters, which is coming right up.